Alrighty, good evening and welcome traders. It is Tuesday, October 24th, 2023. Let's jump into the markets and see what happened today. So we had a nice little update in SPY and the overall markets. So let's just jump into the charts. We had a fantastic day in our account from a net lick perspective and a decent day on a realized gains perspective. So we'll talk more about that in just a second. And we're going to talk a little bit about the difference between, increasing your portfolio's, net lick or your portfolio's size versus focusing on realized gains and losses. I'm going to talk about both and why both are really important. And when I talk about being more interested in my realized gains and losses, I explained that a little bit more to you. As there was a couple questions on the YouTube channel, and we'll try to address those with you and make sure that we're all on the same page. But let's just jump in. So the markets jumped up at the open today, fell a bit during the session, and then rallied back on the end of the day. I know 0 DTE didn't really like the environment on the trades today. Overall, a decent up day. So again, a gap up day, pulled back a bit, and then rallied back towards the end of the day, finishing not at the highs, but finishing pretty well up on the session. So overall, S&P was up 0.75% today, up 317. So $31 on SPX. Doing perfectly fine. So what did we see? Well, as far as the weekly setup is concerned, nothing really happened today or this week so far, except the fact that we have held and we came down and we bounced off of this particular support line, which was a previous resistance, which is now flipped to support. And then we are right back at the 50-day exponential moving average. So overall, still in a downtrend. Nothing has changed that. Nothing to change any of what we're seeing on a weekly perspective. MACD, RSI, all just heading lower and all in an orderly fashion here. If we look at the daily, we just continue to bounce in this downtrend channel. And again, like we pointed out on the weekly, we did bounce off of this lower support level yesterday and then continue to move higher and moving back above the 200 moving average today, which is a pretty good sign as well. MACD and RSI continue to fall overall, but decent progress in the market here. Even though we broke this longer-term uptrend line, let's see if that becomes a resistance level now. So I think this is what we're going to be watching around the 427-ish mark or so. Does this become now this previous long-term uptrend that we've been in? Which we bounced off of and then finally broke. Does that become a resistance level and does it flip? Take a looking at the Qs today, pretty much the same type of thing. The weekly is in a downtrend and RSI, MACD both heading lower, although MACD's trying to make a little bit of a turn. Took a turn for the worse last week, back up to its 21 EMA this week. And if we're looking at the daily chart here, pretty much the same as SPY, a decent bounce yesterday off the bottom Bollinger Band, moving higher, trying to get MACD and RSI to flip around and move positive. Tech stocks having a good overall session. We'll take a look at how some of those things are panning out. And then IWM, same type of a scenario, even though it had a pretty good down day yesterday. Finished relatively unchanged, just slightly higher on the session. Gapped up, but stayed there on the day. MACD and RSI trying to come off of these lower levels here, although the weekly still in a significant downtrend. Would not be surprised to see us bounce and start to head up towards that 172, 174 mark on IWM here if things continue to move higher. The number of companies above their 50-day moving average stayed pretty consistent on the session at about 16%. Still falling MACD and RSI on the daily, but trying to recover a bit on the weekly. Put call ratio dropped significantly, so a lot of call value starting to pick up, which can be, a pretty good sign for the market, but you're starting to now see this drop. And if we take a look at our In fact, let's jump into charts and let's look at the put call 10 with the 10-day here. When you get to this oversold level and you start to drop lower, and again, this is a pretty good down move today. If we start to drop lower, as you can see, normally that means the market's going to move a bit higher. So do we get, if we continue to drop and the 10-day moving average continues to drop here, that is a bullish sign for the market, looking at the put call ratio. So we'll keep an eye on how that pans out. VIX, another down day, dropping back to 1897 here as MACD and RSI continue to fall. So volatility coming back out of the market for us as premium sellers. Perfect for existing positions. Not terrible to put new positions on here because it's still a bit elevated, but it's nice when it really jumps up into the 20s here. You get some really nice premium, but we're pretty maxed out on trades. So I think that bodes well to see volatility dropping. It's starting to mean revert back to the 21 moving average here, which sits around 18. So we're about 1 point away from reverting back to that 21. And then we'll see if it continues to head lower. If we look at the US dollar on the session today, it happened to move up a fraction, still staying somewhat inside of this consolidation range. It broke down below it yesterday, bounced lower, and then back up into it today. Continued to consolidate on a sideways pattern. Will this previous trend line become resistance or not? We'll see what happens, but we're just consolidating here, moving sideways on the dollar. TLT actually had a decent up day for 2 days in a row here. We'll see what happens. Back here we saw 3, 4 really nice up days in a row before it gave up the ghost. So we'll see what happens. But overall, it broke this little short-term downtrend, and then RSI, was not falling in line with that. So good divergence there. We can take that off. We've already recognized that divergence. We'll see what happens. We are in a fairly tight range here in this descending triangle. We would need to break to the upside for anything to happen, but it's a nice upward move overall in TLT. We continue to sell naked puts on bond futures. We closed one today for a winner as well. And then the 10-year moving average, or 10-year, I'm sorry, Treasury continued to fall pretty much unchanged on the session today. It tried to bounce a little bit and then gave it up towards the close. So overall, a nothing day on the 10-year market there. All right, let's jump into some futures and see. With the dollar moving higher today, we saw 6A, which is your Aussie dollar, moved up, but then tailed off midway through the session. So moved up on the day, opened up higher, or opened up kind of flat, moved up, and then sold off as the session went along. 6B here coming down on the session. So you're seeing the British pound coming down, the Canadian dollar futures dropping on the session. 6E, which is one of the favorite charts I have right now for some Forex, broke out of this, broke upwards and now sideways out of this downtrend channel. Let's see if it comes down and either bounces off of it or if we just continue to consolidate sideways for a bit. But I do like this chart. I do like where 6E is on it. Bullish PSAR, but we're getting close to turning it into a bearish one. MACD, RSI starting to fall a bit on the daily, although the weekly seems to be in decent shape, holding in here. Bonds, we covered a bit on it, but we looked at this really tight descending wedge here that we broke out of strongly, moved up, and then had a decent update today on our ZB or our bond positions. So decent update, which is good for us. And after our session is just kind of holding in there, but good divergence, market moving down, RSI not falling, at the same rate, good divergence. So I think right now we have at least a bounce going, Question is, how high of a bounce do we get? And can we break through this downtrend line that we're sitting on here? So can we break through this particular downtrend line? We'll see what happens there. All right, on oil, lots of lines, lots of things going on. On oil, we continue to move sideways. I just can keep moving this sideways. Let's keep moving this a bit as we go. So we just keep moving and consolidating a bit sideways here. We are still in a downward trend on the daily and on the weekly. So oil starting to break through the bottom of this uptrending channel here today. Interesting move. Let's see what happens to oil as it continues to sell off. So oil continues to drop. It moved all the way up into the mid 90s here back at the end of September, came back down, tried to make a little bit of a move, and just couldn't get anything going as the momentum just ran out of this thing to the downside. So we are seeing a downside move in MACD and RSI on the weekly and the daily, which does not bode well for this uptrend. We'll see how it goes. I still don't think oil's going down to 60. So Janet Yellen's not going to be able to fill the strategic petroleum reserve that they completely drained for political purposes at $60. They're still going to have to be paying 79 or something along those lines. So I think 80, 82 is a good area to watch here. That's also the 200-day moving average. We'll keep an eye on this 78, 80 range somewhere in here to see, do we get some support there? It's also the 50-day EMAs at 81, 83 on the weekly. That's also the bottom Bollinger Band is at 80. The PSAR reversal happened 2 days ago. So everything is bearish right now on oil, but I don't expect it to tail off too deeply. But it did break this uptrend channel. So a new trend will be in the making. So still could be a continued higher trend. We may just be moving to a less stable uptrend. All right, and then taking a look at gold. Oh, and oil, as we do every single night here on oil. While oil is dropping, we look at the volatility on oil, and that has also dropped again. Now, it dropped a lot worse to 21 moving average and then rebounded during the session, but still closed lower on the day. So volatility continues to come out of oil here as well, which is good for our strangles. And then if we look at gold, okay, so here on gold, where we broke out of this downtrend channel to the upside a week ago, and we've been just kind of moving sideways to lower this week. Not a big drop, but just inching down. MACD rolling over, RSI coming from overbought levels and heading down. Does gold start to move down like it did with, like we did with oil? Still in all kind of a bullish mode here for the most part, but losing a lot of momentum. Can we come down here to the mid 1900s, click off of this particular channel here, and then maybe bounce higher? But if we also look at the gold volatility, man, down big gap down yesterday, and another huge gap down today, close to the 21. So volatility completely mean reverted back to the 21. So it got way extended and then mean reverted. Perfect for us, because exactly on these highs, we sold strangles, taking advantage of the high gold volatility. So I think that's perfect for us there. And then we've also got a copper trade on, and copper just continues to move itself sideways, consolidating here, having a pretty good week, a couple good up days in copper. MACD moving higher, RSI moving higher, right to the 50, hasn't broken it. If we break the 50 on the daily, I think we could get some more momentum moving, but we held this support level here, which is what we will continue to watch. But we did hold the support, bounced off of it, and then retook the 21 EMA today. Not out of the woods, but this is a perfect setup for our 112. So we've got a 112 trade. It is now up 80% in 15 days. Here we are nowhere near closing the naked puts yet, although they are at a 68% win right now. But if copper does continue this downtrend that it is in, and again, it is an overall downtrend for copper here, and it broke this triangle, an uptrend piece as well. So it is in a bit of a bearish mode, but trying to hang in there. We'll see what happens on copper. In fact, I'm going to update the chart with just putting the 50 on here on the RSI, just so we can keep an eye on breaking up or down around that 50. That is an area I like to see to really show if momentum is taking over on the up or the downside. But you can see here, we just ran up to it and did nothing on the day. So we stopped right on it. Tomorrow, can we keep the move going and the bounce happening on copper? Either way, it's all good. We have a 112 and we're good all the way down to 31. So you can't even see it on this chart, but somewhere down in this area here is our naked puts. So I think we're in good shape on copper. Love where we are on that 112 trade. All right, let's take a quick look at sectors, see what happened on the different sectors today. What was working, what was not working. Well, the semis were obviously working today. So semis still in this falling wedge, but hasn't broken out one way or the other, but downtrending for sure. We'll keep an eye, but if we can get a breakout here on this descending wedge, I think we could get a pretty good move on semiconductors. They were up 4% on the session. So if you're shorting them this week, as some people I know were, probably not the best thing to do in a falling wedge pattern here until you break one way or the other. There's no reason to be rushing trades. Okay, no reason to rush in. Oh, it's falling. I'm gonna get short because everything's falling down. You're in this channel until this is done. No sense of doing anything. Let's say it resolve when we're there. If it breaks below or continues to fall, great. If we break above, we might get a little bullish run. We'll see what happens on semis. Next best performing sector on the day was utilities. So the XLU on the session continues to make good looking gains here on both the weekly and hanging in there on the daily. So not terrible at this point in time. Biotech just bouncing off of the 3 ATR. Oversold levels on the weekly and the daily. This might be a good spot on XBI to do something either on XBI or one of the Pfizer, Merck, somebody along those lines. Pharma as well, doing the exact same thing, kind of following biotech as it's oversold and trying to find a floor here. Real estate up 1.26%, but doing not a whole lot of anything here. The XLB, okay, and the XLB here, when we look at materials overall, still looking pretty weak. Weekly is definitely in a downtrend here, trying to just hang in there on the daily. Nothing I would do to touch that thing at all. Communications here up 1% and change on the day. XLY up as well on the session, about 1%. Then if we look at XLF or XLK, this is your tech stock, tech ETF, decent session. I don't know what to say about financials here. They just don't look good. Weekly looks terrible. There's just no reason to pile into financials. Weekly is heading down. There's no reason to think it's going to stop at this point in time, and that's just murdering your small caps as well. Healthcare here, falling on the weekly. There's nothing to do. You're in this zone. It's nice to watch healthcare. Let's see what happens. But if we get back down to this bottom, support area here, and let's just move this thing out a bit. Do we not do the right one? Oh yeah, we did not do the right one. Let's grab this one. All right. So if we come down here to this support level and bounce again, then maybe it'd be a good time to look at healthcare. Otherwise, it's just diving lower. Stay away from healthcare. The down sectors today, regional banks, oil, and then energy leading the way down. Energy does not look good on the weekly. continues to fall, it's going to break the 50 here if we have another day or two here. And then this support level here has now become a pretty important piece to watch. It's exactly where we closed the end of the day today. MACD rolling over, RSI falling, breaking the 50. Energy not looking too good. You've got oil dropping, energy dropping with it. We'll see what happens on those sectors. And then let's take a look at some of the big name tech stocks here. Amazon having a decent update today as well. Down in after hours markets. So we'll keep an eye on that and see what's happening with Amazon. But right now, all eyes were on, Apple was up fractionally on the day. It's flat in after hours. Now, Microsoft had earnings on the day today. So Microsoft came out and reported earnings. And here's what, 330 is where we finished. We had broken this uptrend here, so things were positive, even though MACD was kind of rolling over a bit. Your RSI was hanging in there sideways, but you were seeing weekly starting to recover. Well, we finished up the session at up about 0.37%, but in after hours, this thing's up 10 points in after hours. So pretty good move in after hours on Microsoft. So Microsoft's up after the bell about almost 4%, stronger than expected earnings, doing really well. Meta having a tough day today, not doing a whole lot of anything. Earnings coming out on that, I think tomorrow. And then Google not doing well in the session. So today, in the normal session, was up 1.69%. $2.31 up, but now in the after hours, this thing is down 9 points, dropping to about 129. So it's going to break for all, if this holds by the morning. You've been seeing, weekly starting to rise, daily just kind of sideways move. You had this uptrending, wedge. So this rising wedge, we're going to break the rising wedge to the downside. Not too good for Google here. So that's not going to look good tomorrow, and that may impact the markets. We'll see. NVIDIA having a little bit of an update today. And then Tesla also having a 2% update today, trying to just hold on to this 618 fib that we've been talking about here, that we broke yesterday, but managed to finish above. And then today, gapped up and held there on the session. MACD trying to reverse, RSI overdone. Is this a place for Tesla to start to put in a base and potentially make some kind of a rally move back up? We'll see. Really, it's going to matter. Do we hold this support level here, which we've held already, and this 618? We'll take the 618 off. We got the bounce off of that. We'll just keep an eye on this support level, which we know is also the 618. So we'll keep an eye on how that goes. And then AMD, why do I keep covering it? Because we have a trade on in AMD, and it came down and it's been bouncing on the top of this descending wedge. So it broke the wedge when we added the trade here, a put credit spread. It's tailed off since, moved up, tailed off since then, moved sideways, has bounced off today and moved higher. MACD still falling a bit, but RSI trying to hang in there. But the weekly still doesn't look terrible. MACD is rising, RSI is falling. So I just think a little bit more sideways move on AMD is all we care about. All right, let's just jump into our account and see what we're dealing with on the account today. So we had a good day overall. And what I want to do before I share that is we'll load up on here, and let's jump into the trade tracker for the day. All right. So here's where we were on the session today. We ended the day with a delta of 452, which is 0.15, which is perfect for us, well within our 0.2 threshold. We're pretty delta neutral. Theta dropped a bit today, which is totally fine, 1713, 0.56, So it's still high theta, which means we probably have a little bit too much risk on, which we can tell based on where our BP is. Net lick rallied significantly today. We ended up being only 300 points away from the all-time high in this account. So our account is now back to all-time highs on net lick. And we're going to touch base on this and why I do and don't care about net lick. BPUs, it ran up a little today. Not really sure why. We took actually a trade off, but BP ran up and vol's coming out. So we'll keep an eye on BP. It did drop percentage-wise to 78, 79%. And then we pulled in $203 in cash. So again, well, to every little bit helps. Huge day yesterday, $7,100 in realized gains. Today, another 203. Overall for the month, 11,771. We're up 4% in realized gains on the month. And then we're also just looking at our net lick. We're up $10,000 on our net lick, which is 3.86, which is almost 4% gains there. So almost 4% on realized and 4% on net lick. So let's talk a little bit about why I don't care so much about net lick. And there's some, and always got to be one or two in the crowd. Well, why don't you care about net lick? That's all that matters is net lick. Well, it's not all that matters. It depends on your trading. So when you're talking about realized gains versus increasing your portfolio size or net lick, it varies depending on your trading goals, your risk tolerance, and your trading strategies. Okay? Both factors are important. Okay? Obviously, you don't want your net lick to drop unless you're taking money out to pay yourself because you're trading for a living. Okay? Or maybe you're in retirement and you're making some gains, okay, and you're taking money out, and your net lick is staying, pretty much the same. Okay? So here's why they may differ. So for realized gains, for me, I'm a trader. I'm not a long-term investor here. Yeah, I want my portfolio to increase to a point, okay, but I'm also using it to live on. Okay, this is not my only portfolio. This is just the one for the Income Navigator service that we do. I have other accounts. I have larger accounts. I have multiple IRAs. So there's other accounts that we trade. This is a smaller one, but I do this for that service. It's easier to wield this particular account. But I'm really focused on realized gains, okay, which is the gains I'm actually making from my trade. Just because Apple goes up, okay, doesn't do me any good if I'm trading for a living. Doesn't do me any good if I'm trying to live off of the gains I'm making. I'm taking money out. Okay, realized gains are crucial for measuring the success of your trading strategies and achieving your financial objectives. If you're a trader, if you're an investor and you love buy and hold, or you want to do dividend investing or whatever the heck you want to do, okay, great. Now maybe you're looking at your net lick or your portfolio size. Okay, I'm not trading this account for long-term, retirement gains. Okay, this account is a trading account. I am trading here and I'm generating realized gains and losses, which is why I don't care about my net lick going up and down. It doesn't mean I want my net lick to go to zero. Okay, that would mean a bunch of losses. Okay, but because I'm a trader, net lick really doesn't matter. Okay, because the goal here is to create income on a monthly basis. What I'm teaching is income creation. And if we can earn 3% a month, which we're going to hit almost 4% this month if things hold, okay, we still got a week to go, so anything can happen. Okay, but right now we're over 3%. We're doing great. Back in January, we made 20 grand, okay, which was fantastic. So you never know what you're going to, and then in February, we only made $4,400. Okay, still not bad. Okay, but I'm looking to trade and make a profit every month. If I'm hitting my realized gains every month of 3 to 4%, then my net lick's going to go up. So what I want you to focus on is stop stressing about your net lick. We have some members that'll post every single day, I'm down today. Oil's killing me. I'm red. My account's red today. And then the next day, oh, I'm doing great. And then the next day, I'm red again today. And then I'm red again the next day. And then I'm up the next day. Okay. It's all your net lick. Have you closed any of those trades? Not necessarily. I haven't. Okay. look at these realized daily gains. Okay, they're all pretty positive. Okay, going back 2 weeks now, almost 3 weeks of gains in here, doing pretty doggone well with these particular gains. So this is $16,000 in gains in 2.5 weeks. Okay, and my net lick has also gone up from essentially 286 to 307. So net lick's gone up 20 grand. At the same time, I've made $16,000 in realized income. Coincidence? I think not. If you're a trader and you're winning consistently and you're hitting your trade targets and your trade plans, your net lick is going to go up. So when I say I don't care about my net lick, I really don't care about intraday moves. I don't care if it goes up or down. I mean, today it went up $8,000. Okay. Back here on the 13th, it went down 13,000. Then the next day it went up 10,000. Then the next day it went down 1. Then it went down 2,000. Then it stayed the same. Then it jumped up 7,000. Okay. Then it jumped up 10,000. Okay. And now it jumped up another 8,000. Okay. Why am I going to get fixated on just watching my net lick go up and down and stressing? I trade without emotion. It's one of the core principles here. I don't want to get caught up. I do track it, okay, but I track it for certain purposes, not so I can get stressed every day. I'm just telling you what it is. I'm watching what it's doing, okay? But the biggest thing to me is, am I making my realized gains because I'm a trader, not a long-term investor with this account, okay? So I hope that makes sense. If you want to increase your portfolio size, okay, well, that involves growing the total value of the investments over time, which I'm still doing, okay? And it can be achieved through capital appreciation, contributions, or potentially gains in doing some trading. Well, my net lick is rising. I started this account at $30,000 4 years ago. It's at 307 now with no contributions. Why? Okay, because I'm trading it higher. I didn't buy Apple and then just go away and hibernate for 4 years and hope that Apple or Tesla was going to appreciate this amount. You can't make this type of an appreciation with buy and hold. Okay, buy and hold is great. There's nothing wrong with it. For certain accounts, I think that's totally fine. But if the market's going to go up 10% a year, that's not getting me where I want to be. I'm not happy with 10% a year. Where is SPY? Okay. SPY for the month, this past month, is down 2%. SPY is down 2% overall on the month, and I am up 4%. Okay, so I'm beating SPY this month by 6%. Okay. Oh, but you're going to miss out. Year to date, where is it? Well, year to date, SPY is up 11%. Okay. Where's the Qs? Because yeah, but the Qs are even better. No, they're not. Here they are. So yeah, Qs are up 26%. It's not better than my account. Okay. My account is outpacing Qs as well, but it's definitely outpacing SPY and it's definitely outpacing IWM. So if you were in small caps and if you're 60-40, retirement portfolio, you've gotten creamed on bonds. Okay. Your bonds have dropped in half. Okay. So you're not doing well as a 60-40 investor either. Okay. If your 60 is in S&P, okay. If your 60 is in S&P for the year, you're up 10%. Okay. But what are your bonds down for the year? Let's take a look. And then bonds are down 10%. Okay. So you're up 60% of your portfolio is up 10% and 40% of your portfolio is down 10%. So you're probably up like 2% on the year. Okay. That's not what my goal is here. My goal is to trade for a living. That's why net lick doesn't matter on a daily basis. Sure, I want to see it rise over time until I start withdrawing. But if I'm trading for a living, I'm also withdrawing money out of certain trading portfolios. Okay, so my net lick doesn't matter quite as much. But the goal here is to trade for a living, okay, and win on my trading strategies. That's where my focus is. My focus is not on daily net lick and stressing out that it goes up and down 5 to 10%. Okay. I have another portfolio well over $1 million. That thing goes up $30,000 a day and down $30,000 a day. people would stress out on that. Okay. I don't care about the net lick because I'm looking at the daily realized gains and the daily realized losses, or the monthly, really, on what I'm doing. Okay. So that's what I want to focus on. So I hope this makes sense as to why, to me, net lick really doesn't matter on a day-to-day basis. Okay. What matters to me, okay, is this weekly and monthly realized gains and losses in this account, because I'm a trader and my goal is to trade and book profits, okay, grow myself that way. And I know that if I win and I can track my strategies, and that's where my focus is on, okay, I can't get focused on, oh, I'm down 10 grand, I better put something on to stop that. No, I got to focus on the plan. So I want you to focus on your plan, have a plan, trade your plan. If we look at the small account as well here, this is absolutely a new all-time high. So this is the highest that we have been in this account ever. So this small account, which started at $10,000 last November, is now up 40%, $4,000 in the small account, using the same types of strategies. Okay, this is what my kids are doing. Okay, so this is what young people should be doing. You're starting small, you're trading on it. Okay, but what we're doing is we're focusing on generating monthly realized gains. Last month, 3% gain. Okay, our actual net lick last month fell. Okay, we dropped 19 bucks on our net lick, but I made 440, and guess where we are? A new all-time high. Okay, so again, my net lick didn't matter. What matters is, are you generating the cash you need, okay, and the gains you need to grow your portfolio the way you want to? Okay, not saying that like doesn't matter at all, but it really doesn't matter day to day at all for me, or even month to month. What matters is, if I do my trading correctly and perform correctly, I'm going to do well. Here's an IRA account that we track in the Income Navigator portfolio. This is also at a new all-time high on net lick, but I'm more excited about the fact that I generated $8,200 this month, which is almost 4% on this. Okay, if you're buy and hold person, okay, you're not up. Okay, I'm beating that. You're down 2%. I'm up 4%. Okay. Well, but look at your monthly. Let's just make sure this is right, which is not. Okay, we're up $4,000 in net lick, which is only 2%. I don't care. I'm worried about, because if my realized income hits what I expect it to do, the net lick will take care of itself. So that's what you focus on if you're a trader, and if you're actively trading, which is what we're doing. If you want to buy and hold, feel free. Okay, but also, you know, I want to be a dividend investor, because there's these guys on YouTube and they're generating $40,000 a year in dividends. Okay, and I want to live on that. Do you know that at roughly a 2% dividend yield average, you need a $2 million account to generate $40,000 a year? If you're, you know, and what are we in? Let's look at realty income. Okay, realty income, what's the dividend yield on this one? 6%. So if you put your money in realty income now, where is this thing year to date? It's down 18%. Oh, but Tom, I'm getting 6% dividend yield. Yeah, your stupid stock is down 18% this year. Okay, so you know, even if you got the full 6% yield for the whole year and you're down 18%, that's a negative 12% for the year. How are you liking that? Okay. Oh, but my dividend yield is 6%. Okay, let's assume that your dividend yield is 6%, and I want to make $40,000 a year. Okay, you need to have $666,666 in your account. Some of you have that, and some of you don't. How are you going to get to $670,000 in an account holding only a 6% dividend yielding stock? Okay, I don't know. You're going to have to grow it somehow. You think just sitting there and holding on to your little Tesla stock is going to help you? Okay, where's Tesla for the year? Oh my gosh. Okay, Tesla, but Tom, it's yielding so much money every month. the doggone Tesla stock is down 41% this year. Oh, but you're just picking random. I just picked a year. I didn't pick a certain day. Okay. Now that's 1 year. I'm sorry. Year to date, it's only down 11% year to date. I'm sorry. That 1 year was a full year, 41%. It's only down 12%. But in 6 months, it's still down 12%. Okay. I don't care how much you're getting from a dividend yield on these things. You have to have an awful lot. And if you're worried about, like some of you are saying, all that matters is net lick, you can't speak out of both sides of your mouth, because if net lick is what matters, okay, your net lick's getting wrecked by dividend stocks here, by SPY, and by realty income, and by other things this year. Okay, over the last year, this year to date, 11%. You're not doing very well, okay, compared to traders. So anyway, I want you to keep that in mind as you go through. It's not that net lick's not important. What is important, though, to me, is that I grow it the right way, and to me, that is actively trading. Let's take a look at what the one trade we did close today is. This was a ZB, which is a bond futures. So we did close the 30-year bond future that we bought back on 10/23. Today's the 24th. Do the math. That's 1 day in trade. And normally I close at 50%, but I had a chance to close it at 34% in 1 day. Well, why would I wait any longer to get to 50% when in 1 day I made 34% on this trade? So I closed it, took the $203, 8.7% return on margin, done. Book it and add it to the count for the month. We'll go back in. We played that volatility play on bonds, and bond volatility is still up there, 69 IVR. Okay, it's still a good opportunity to play bonds before they start to tank again. All right, that's it for the day. Today, folks. I hope this made sense. I hope you get a sense of why, to me, realized income is what I focus on, not net lick on a daily basis. I can't get freaked out on ups and downs of net lick. If you trade your plan and you have a strategic plan and you understand what you're doing from a trading standpoint, net lick takes care of itself. That's it for me today. You guys take care. Stay safe out there, everybody. We'll see you tomorrow. I know it's a long session today. If you liked what you got out of it, please click that like button. Go ahead and subscribe here. Join us in the Discord and see how we're making money for everybody else on there. Take care, everybody. Bye-bye.